Well, about half an hour ago, U.S. oil inventory figures were released. Oil inventories in the U.S. rose about 8.2 million barrels last week. That was versus an estimate of a drop in inventories of 1.15 million barrels. For more, let's bring in insight from Bill O'Grady. He's Chief Market Strategist at Confluence Investment Management. Bill, let's begin with your quick reaction to those inventory numbers of earlier this morning.
Well, unfortunately, and the numbers were delayed. They actually came out about 10 minutes ago. The DOE, I think, is still having data glitches, so I wasn't able to get through all of it. Obviously, the build in crude is more than we expect. What I was unable to get was the breakdown between how much of that was SPR oil. But in an era where the SPR is releasing lots of oil, it is kind of playing havoc with the usual seasonal patterns of crude oil. Now, the other part of the data, we did see draws in both the major products, which is supportive for both. And this time of the year, distillate usually rises. So the draw in distillate is offsetting some of that bearishness that you would expect from that big unexpected build in crude.
What's the demand picture looking like, particularly in gasoline, where those prices are so high at the pumps?
Well, it's softening a bit. We have started to see the 4-week moving average of gasoline supplied decline under the average and under last year, and I think that is a reflection of a couple things. One is the high prices is affecting things, but the other is that there's growing evidence the U.S. economy is slowing. There's a long known adage in energy that the price, demand curve is pretty inelastic in terms of price, but pretty sensitive to growth. And as growth starts to fall, that will reduce demand for driving, and consequently, it's kind of how this is supposed to work. And so we will start to see demand ease, and we are starting to get early signs of that.
What are your thoughts on the volatility we've seen very recently in crude oil prices? We hear repeatedly from oil watchers that they think the supply fundamentals are in favor of stronger oil prices, but the market is more concerned, I guess, with the demand side, worrying about a recession and what a recession will do to oil demand.
And that's a very legitimate worry. Even if you go back through the 70s, recessions tend to bring down all commodity prices and oil prices too. The supply situation is really fluid right now, and it's almost impossible to kind of keep up with it. But as the global economy slows, this is going to ease demand, and it is a bearish factor. Now, the problem is that at some point these central banks will reverse their policies. And if the supply situation continues as it is, the rebound into the recovery will probably be pretty vigorous.